What will the Reserve Bank decide at its meeting in November on Cup Day? That's what Dr. Andrew Wilson and I discuss in this week's Property Insider Chat. We talk about the latest Reserve Bank minutes, what their thought processes are. We also have a chat about the latest unemployment figures and give you an update on what's happening in the housing markets. If you want to keep up to date with our real estate markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. What will the Reserve Bank do with interest rates at its November Cup Day meeting? While many commentators thought we'd reached the end of the rate hike cycle, all of those interested in property, in fact, wished that was the case, but there now seems to be more uncertainty about the next Reserve Bank decision. In its most recent minutes, the Reserve Bank confirmed it doesn't expect inflation to return to its 2 to 3% target band until December 2025. Now, that's almost 2 years away. Michelle Bullock's first Reserve Bank board meeting as governor warned that world oil prices are now being pushed higher, or could be pushed even higher by the Middle East conflict, and that could prompt a lift in interest rates. The Reserve Bank minutes explained the board is now a low tolerance for a slower return to inflation to target than currently expected. Now, clearly, the Reserve Bank is going to take many factors into account when it makes its decision, including the upcoming inflation figures later this week, our jobs market and household spending. To discuss the latest information about these, I look forward to my weekly chat with Australia's leading independent housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael. And an interesting discussion points this week. We had the minutes from the Reserve Bank released last week. Maybe there was a slight change in the narrative, but again, it was very equivocal in terms of a little bit of this, a little bit of that. Maybe this, maybe that. Given that the problems that commentators and forecasters have had with economic outlook, we really have to take a grain of salt. And it's almost flip-flop from month to month, or maybe even week to week, in terms of what outlooks are. And I think we've got to understand that we're now pushing into 2 years since we raised interest rates, well, 18 months. And yet we have just absolutely no sign that monetary policy is doing the job that it's supposed to do. I'm just wondering whether 2 years is enough, or 18 months is enough for us to gauge that whether they've been successful or not, where they should go, where they should follow from here. You've got to understand that when interest rates were first increased, it was actually enough of a shock because we hadn't had an increase cycle for over 10 years to actually have more of an immediate effect perhaps than the actual interest rate itself did, if you understand what I mean. That big deal coming from 0.1%, big deal. It did shake the market fundamentally, particularly the asset market. Just absolutely, in my opinion, no sign that the Reserve Bank's policy has done anything near to what it had planned for it to do. So I can only see the future being upwards. I'm still bemused when we talk about rates, Michael, that you'd think the banks had learned, but I think the banks are still forecasting cutting interest rates within the next 9 months. Good luck with that. It seems our economics departments are even more glued to the marketing department in terms of what they want rather than what the economy is demanding.
3 of the 4 big banks are suggesting that there won't be a change in interest rates in November. The National Australia Bank believes there will be one. I'd like to get your thoughts on the latest Reserve Bank minutes, but before we do, I think it'd be worth just talking about what's happening to our labour markets, because that's going to be one of the factors the Reserve Bank takes into account. It seems like the Reserve Bank has been wanting to raise the unemployment rate, again, to slow down our economy. But that's not working, is it?
Well, we went backwards again. It was another remarkable month for the labour market, Michael. This is what I'm saying. Not only have we not shown some signs of a slowdown, even though the Reserve Bank seems to be trying to convince themselves that that's occurred, our labour market remains as strong as it's ever been, perhaps even stronger. The latest data showed that the September unemployment rate fell to 3.6%. That was down from 3.7%. We actually had another increase in jobs, up by 7,000 over the month. Of course, that followed the very big gain that we had the previous month. the number of unemployed also fell again, Michael. So it's just a continuing process. More jobs, fewer unemployed. And unemployment was down by 20,000. That's a big number. It was only 3,000 for the previous month. The participation rate tickled down a little bit, 0.2% from the previous month's result. But the previous month was an all-time record, Michael, 66.7%. Participation rate just down by 0.2%. Again, this is just an extraordinarily strong month of labour market results. Jobs continue to surge. The number of unemployed continues to fall. We're tracking still around the highest number of people from the potential workforce that are actually working. We're back down 3.6% unemployment rate. So where's the impact from higher interest rates, Michael? And isn't it the fact that the way we slow down the inflation is to stop people spending? And the primary measure for that is to, unfortunately, see fewer people in work, to see people losing their jobs. Now, we're going completely the other way. We're creating more and more jobs and fewer people are unemployed. How's that supposed to impact inflation? And as we'll discuss shortly, the Reserve Bank is actually changing its focus, which I think is very interesting because it's sort of given up on using, it seems, the official unemployment data, the ABS data, well, the headline data, in terms of the unemployment rate, as being its yardstick for controlling inflation. This, once again, it's about if policies don't work, well, it's not about changing the policy. It's about let's try to justify it with some other particular measurement. And we'll discuss that shortly.
The Reserve Bank releases minutes of its meeting to give us an insight into what they were thinking, how they came to their decision. And it's a reasonably long document, but I know you took time to pore over it, look into it, and get some idea, peek behind the curtains. What were your thoughts about the RBA's October minutes?
I don't think they have a lot of confidence where the economy's headed in terms of, or particularly where interest rates are headed. We've had this wait and see mantra since May this year. So we've had rates on pause all but 1 month since May this year. And it was because, we want to wait and see what's happening. Well, what's happened? Nothing's happened. The economy is strengthened. The labour market has strengthened. The housing market has strengthened. Where is the validation? I mean, how long are the Reserve Bank going to wait and see, Michael? I mean, what's the horizon here? And I think that as long as we still continue to get these very strong results from the economy, and you can't argue against them. I mean, you can look at some of the minutiae and say, that's weaker. And I think that's what the Reserve Bank are doing, particularly in terms of the labour market. But all the headline stuff is still very strong. And is it any surprise that our inflation rate is still way, way, way too high? And I noticed the Reserve Bank didn't mention their target. They're still heading to get back to the 2 to 3% underlying target by the end of 2025. They didn't mention that, but they did mention that there were some changes to the potential for that. There were some bits and pieces. The first thing was that the Reserve Bank has said that it believes the labour market has reached a turning point. Not sure where they're getting the data from for that. Well, I do know where they're getting the data from that, and that's from they're now going to look at different aspects of labour market performance to gauge the strength of the labour market, and that's going to be hours worked and underemployment. So all of a sudden they're going to shift across to that. Apparently there's a government white paper that's been released. It said that you need to monitor a broader set of indicators beyond the unemployment rate. And the Reserve Bank is saying, okay, we're going to do that. So they're looking now at marginal changes, in my opinion, to youth underemployment and to hours work. And yet we still have this massive results in terms of fewer unemployed, a surging employed, and record high participation rates and record low level unemployment rates. So to me, it seems to be they're thrashing around looking for some justification that their monetary policy has worked. It hasn't worked, Michael. They say themselves that services costs are still rising, and that's been released by higher interest rates. That's a consequence of higher rates is now being entrenching inflation in the services sectors. And even though goods prices have eased, but that's just a product of the post-COVID adjustment that was always going to happen, I believe, regardless of interest rates. And again, they commented in their minutes on the housing market. They concede that the turnaround in the established housing market has continued recently. It's now speaking of upward revisions to earlier data. They mentioned listing numbers have picked up in Sydney and Melbourne. While it is spring, this is a period where we do get a surge in new listings. And again, they've conceded that the stronger than expected recovery in the established housing market might provide some support to household consumption in the period ahead. They're looking for additional data that will come through prior to the November meeting. Well, we've had the labour market data, Michael, and that's pretty strong. And they're saying that some of this data that's coming through that they're going to use for the November decision is outside data. So it's not the data that we see, it's from their internal sources. So once again, it's like trust us, we're the Reserve Bank, But the data that's been revealed so far, not just this month's data, but the data since monetary policy was tightened way back in May 2022, has really shown no sign of impeding economic activity at any level, Michael, in my opinion. So that's my 2 bobs worth.
Well, we'll see what the September quarter CPI figures come in later this week. There's not going to be any really new housing data coming in before the next meeting, so it'll be interesting to see what the end result is. I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. In the meantime, the auction markets have kept on despite higher listings. That's what would normally happen in spring. I guess we're coming up to a Super Saturday shortly before the Cup Day weekend too.
Yeah, so we'll have more listings. I thought it was quite a reasonable result last weekend. We were starting to perhaps ponder, the outcome has been that we were tracking consistently below the peaks that we reached in late autumn, early winter, particularly in Melbourne and Sydney, Michael, which had some very strong results in terms of auction clearance rates. And part of that story, of course, there's a number of factors, aspects to the easing in clearance rates, certainly higher listing numbers, which is absolutely typical this time of the year, notwithstanding the cycle. Still a bit of catch-up happening with those that sat on their hands last year through the scare campaign that was run in the media about house prices, which of course was just another gobbledygook nonsense story. Also, of course, prices have increased. I mean, we're going to see 10% in Sydney, 10% in Adelaide, 10% in Perth likely, and closing in on 10% in Brisbane, house price growth this year. So affordability barriers are starting to rise, Michael, with inflation and higher interest rates, all those sort of bits and pieces. And a lot of pent-up demand has been satisfied. So, of course, we're starting to see less buyer activity, but of course we also have higher listing numbers. So notwithstanding all those factors, which we discussed last week, I thought it was some quite reasonable results on the weekend. We saw a lift in listing numbers in Sydney and Melbourne. Sydney had similar clearance rate to the weekend before, just under 73%. So it held firm, which is still a good result for most sellers, above 70%, Michael, and still tracking above where it was in the reviving market last year. But you can see how much higher listings are now compared to a year ago, when sellers didn't want to have a bar of the market because of all the scary stuff that was being promoted. Melbourne, another big weekend in auctions, just under 1,000 auctions in Melbourne. I thought that was a good result for Melbourne too, just to bounce back, Michael, just under 70%.
Considering how many properties are up for sale, you're right, Andrew.
Yeah, I thought it was a weekend where if Melbourne had have gone back into the mid-60s, that it might have been really revealing a trend emerging of a weakening market. But I think the fact that over nearly 1,000 listings, a clearance rate just a tick under 70%, higher than the weekend before, I thought that was a consolidating result in a market that I still think favours sellers generally. Particularly eastern suburb sellers are quite active, but not just marginalising at the east, but I think generally Melbourne's still a reasonable market. And looking at a year ago, similar auction numbers and a higher clearance rate. I thought they were good results for Melbourne and Sydney, a very solid performance from Sydney and a consolidating and a solid performance from Melbourne. Brisbane was up, higher auction numbers in Brisbane. Good result there for Brisbane. Adelaide's been just softening a little bit, Michael, which is very interesting because Adelaide's been that go-to 80% clearance rate, 90% clearance rate auction market. And now it's just softened off a little bit, which I think is quite interesting. And a lot of auctions, that's a very big number of auctions in Adelaide, Michael, 122 auctions. That's very, very big. So I think that's got something to do with it. More choices for buyers. But it's just a bit strange to see 2 weekends in a row in Adelaide under 80% and really just over 70%. Canberra's just maybe shown some signs recently of also consolidating and picking up slightly with a clearance rate above 60%, which was a little bit down on the previous weekend, which was its highest result for some time, just under 70%, but just a modest number of auctions in Canberra. But I thought overall, with perhaps the exception of Adelaide, I thought was obviously perhaps loaded up with a big number of listings, and that pushed the clearance rate down. We'll have to keep an eye on Adelaide over coming weekends just to see whether this is an emerging trend. But I thought the other markets performed quite well, particularly given that we got to that position where we're saying, yep, we're off the previous peaks. So where do we go from here? I think markets are consolidating going forward. And I think that's a very good sign for the market in terms of its balance, that we're starting to find that more of a level environment between buyers and sellers, and we're seeing the disruptions of the last couple of years starting to wash out of the system. And when we look at the Sydney still tracking above 70%, 72% clearance rate so far over October. Melbourne, again, it's actually tracking higher than September, 69.3% clearance rate so far over October. And that's not too bad. As I said, I think that Melbourne market's just holding up at the moment. Brisbane just above 60%, but it's had a weaker last few weekends, but still tracking above 60%. And Canberra, just as we mentioned, picking up as well. So Canberra market is picked up and consolidating above 60%. So as I said, I think there's some reasonably positive results there, following what was a little bit of a shakeout last weekend. And we look forward to, as you said, Super Saturday coming up this weekend, which is the pre-Melbourne Cup final Super Saturday of the year. And we'll see how we go in terms of all those offerings. And Super Saturdays can actually bring higher clearance rates, Michael, despite the surge in listings, because a lot of people wait for those more particular properties to become available. So it will be an interesting weekend with certainly close to the biggest numbers of auctions. I think Melbourne will have its biggest number of auctions for the year so far. So that'll test that mark. And of course, if you want those auction clearance rates, they are available on my LinkedIn channel. Every Saturday night, the headline results at around 6:30. And Michael publishes the National Market Report on Sunday, which includes the breakdowns for Melbourne and Sydney regions.
Now, it's only a scary thought, 2 months for Christmas, which means that when you look at auction campaigns and how long they last, how long agents like to have in advance, it's only another month or so of new listings coming on the market, and then fewer people are going to be putting their properties on the market. So the next month or so is going to give us a good indication of how the year is going to finish off in our housing markets, Andrew.
And we usually see lower clearance rates as the year ends because sellers become a bit more circumspect and there are more properties in the marketplace. And even though sellers obviously are motivated to sell before Christmas shutdown, I think that it's been generally a year where there's more confidence in the market and that they wouldn't have that real same sense of desperation going forward, looking for a buyer as perhaps they did a year ago.
That's right. Of course, what the Reserve Bank does in November, that doesn't have a meeting in December, will have an effect on buyer and seller confidence. So we look forward to discussing that again as we catch up every week. Thanks for your time, Andrew.
Yes, thanks very much, Michael.